What's up, audit fans? Today we're talking about auditing cash. Cash is really important because if we're not bringing in revenue from our customers, we're not going to be able to pay our suppliers, our employees for our rent, utilities, and any bank loans, plus potentially dividends to shareholders. So today we're going to be looking at cash. I'm not going to specifically go over too many of the processes related to cash because if you've watched my videos on the sales process and on accounts payable and expenses, you'll know that there are internal controls over receiving cash and paying cash. We're going to try and dig in more into the substantive tests. Let's get into it. Hi, and welcome back to my regular subscribers. For those people who are new, my name is Amanda. I do love to audit and I teach auditing to undergrads at a major Australian university. Now, today we're going to dig straight into cash, and you can see here on my tablet, I've got some typical cash controls. Now, in terms of those controls, this is over, I'm assuming like a retail process here. So you've got things like a register to manage cash receipts, a reconciliation of the drawer. Remember the thing that goes cha-ching that comes out where you give people change, to the register at the end of each day. So making sure that the money in the register is what we should have there and whether we're over or whether we're short. Depositing cash into the bank account needs to be segregation of duties there so that somebody can't steal cash and then potentially record that less cash was banked, and that we want to have people doing the bank reconciliation. So that's sort of a common control process over that sales and cash receipts process. I've got three specific controls here related to spending, which is about approval to spend. So we already know that there needs to be different approvals for spending and that there needs to be segregation of duties. So the people who approve a request are different from the people who do the accounting so that there's less chance for fraud and collusion. My third internal control there is authorization over electronic funds transfer. So in terms of approving funds transfer, we need to make sure that there are multiple, are there two people required? In a big company, often it's dual people. If it's a single person, do they have any access to the accounting? Is there any chance for manipulation? So in terms of the controls, we have lots of different controls. And remember, you're going to need to identify the controls at your client or at your case example if you're doing this in an exam or in a class exercise, because unless you know the controls, you can't design a test to make sure that that control is working. So in terms of tests of controls, I'm going to write one here. Let's use purple. I just realized I needed a color that I haven't already used. But there's lots of different tests around cash controls that you will be testing when you're testing sales and cash receipts and purchasing and expenses and accounts payable. So realistically, there's not a lot of controls testing that you would do on cash specifically on its own. That's not linked into everything else. Because remember, when you make a sales transaction, you go debit cash, credit revenue, or if it's on accounts receivable, you go debit accounts receivable, credit revenue, and then later you go debit cash, credits account receivable. All right, so those are the transactions. And we know that on the other side of things, I'm going to go debit expense, credit cash, or I'm going to go debit expense, credit accounts payable. So when we pay the cash, I'm going to debit accounts payable and I'm going to credit cash. Okay, so realistically here, in terms of auditing cash, when I audit expenses, when I audit revenue, when I'm auditing accounts receivable, when I'm auditing accounts payable, I'm also auditing cash at the same time. So in terms of the types of tests of internal controls you might do separately, probably the biggest one that you're going to do is you're going to review the bank reconciliation for evidence it has been, we're going to assume it's completed, reviewed by an appropriate staff member. Okay, now you'll notice here that I'm not saying that we should actually reperform the bank reconciliation ourselves, because normally the bank reconciliation is done by somebody in accounting. Somebody else will review the bank reconciliation to make sure it's done correctly, and then they will sign off. All right, so it's important to understand the difference between testing the control, which is somebody checks it and is signed off. So we might be looking for a signature. See, example, looking for a signature and date. Now, of course, a really common thing is that companies will forget to review the bank reconciliation, and then what will happen is you'll turn up. They know that you're going to ask for the bank reconciliations. You'll get a stack of bank reconciliations that look to have been signed all in the same pen, like in exactly the same spot. Like somebody took a pile of the bank reconciliations and went sign 1, next, sign 2, next, sign 3, next, sign 4. Now, of course, that does pose a risk that the control is not operating correctly. And if that does look like the case, is there some sense of review? Did they highlight anything? Did they check anything? Did they make any question marks to prove that that review really did happen? But in terms of the tests, we might also do things like look at access logs to the bank account. All right, especially if it's, this is going to be electronic logs, of course. So we want to know who can access, how often, and that might help us identify some trends. So if you know that accounts payable is always paid on Thursday, you should see the accounts payable clerk accessing it on Thursday. You might identify, did anybody access the bank account on a weekend? Because that might be an indicator that there's something unusual going on. If the business only works 9 to 5 and you see bank transactions initiated on a weekend, I'd be asking, what's going on there? So you might want to look at those access logs and look at the processes they have for internal control. So when somebody leaves the firm, does their access to internet banking or the firm's online banking system, if they're an accountant, does that get removed? So it depends on the control processes. Remember, you've always got to understand your client, ISA 315, to be able to then design the test of internal control. So what sort of substantive tests for cash exist? Well, remember that cash is made up of a whole lot of transactions. Every single sale and expense does result in a transaction. Here, I'm going to be talking about cash as a balance rather than as individual transactions, because you'll be auditing those transactions when you're testing sales, leases, expenses, accounts payable, inventory, etc., because that's the other side of the journal entry. So the first thing we always have to do is we start with our assertions. So the first thing I'm going to do is write the assertions down. Okay, so now we have our assertions, and this is really important because remember we're looking at cash, but we're also looking at cash equivalents. So this is where Wirecard and EY went a little bit off the rails, where they had cash equivalents and they had these escrow accounts where they didn't actually confirm that the cash really did exist. So our first assertion that we're going to be talking about today is the existence assertion, and it's how do I know that the cash is really there? Now, the number one way that we could do this is to request a bank confirmation. And remember, we have an international standard on requesting confirmations. We always want to try and use a positive confirmation rather than the negative. Remember, the negative confirmation is if we don't hear anything back, everything's okay, but we want to request a bank confirmation. Now, in the past, we would have had to pay for a bank confirmation. We fill out a form, we take it to the bank, they provide us then with the bank confirmation. Now, of course, this confirmation requires us to assume that banks have strong internal controls. All right, systems of internal control. Now, that is, they're highly regulated. Every country highly regulates their banks. So we would assume, and it's pretty safe to assume, that the banks have strong systems of internal control. Now, in terms of requesting that confirmation, you can individually write to the bank using a bank confirmation request form, or you could use an online third-party provider And there's really only one. And that service is a service called confirmation.com. And what I really suggest is that you follow Brian Fox on LinkedIn. Brian is, he was the developer and originator, CEO of Confirmation.com. Confirmation.com is now owned by Thomson Reuters, but it's a service where you pay a fee, access fee, and then they're linked into hundreds of different banks. You put in your client details, you select their banks that they use, and Confirmation.com handles getting all of the confirmations for you, and it sends them straight to your portal. So we see Confirmation.com used by lots of accounting firms and audit firms now because it just saves the hassle of trying to find that bank's form and write and send it in. Now, a student of mine asked a really great question. That student said, Amanda, what if the bank is what if your client is a bank? So what if you go to Bank of America, or you go to HSBC, or you go to Westpac, for example, here in Australia, or ANZ? How do you confirm that money exists for banks? And that was a really great question. I did some research, and so most of the time, if you're a bank, so if the client is a bank, hang on, I'll do this in a different color so it's easier to read. So if the client is a bank, then there are a couple of different ways, but normally what they do is they have accounts with the central bank. All right, so most of their money is actually stored with the central bank in either a daily exchange trading account that allows them to have interbank transfers, or they hold it, for example, in the United States, banks all have to hold their cash with the Federal Reserve in their particular city. So then you would contact the central bank potentially to try and get a confirmation. Now, if you've audited a bank, I'd love for you to share how you actually confirmed what that process was to confirm bank balances with financial institutions, because again, that's where Wirecard went a little bit astray. It was a financial institution, it had money somewhere, so checking the existence of cash, that is going to be our number one risk. So that's number one. Number two is going to be accuracy, valuation, allocation. So number one, does it exist? Because people are more likely to overstate cash than to understate cash. And number two, is it recorded at the correct value? Testing completeness is really, really difficult for cash because you're trying to find out if the company or your client has cash accounts that are not recorded in their books. All right. So you might be looking for purchases that don't link to a known bank account. All right, so that might come from when you're auditing any transactions. Now, likely, it's not going to be small accounts and small transactions. So let's say the company bought a new factory and you think, oh, okay, all right, they've got a new factory, they didn't get a new loan, they didn't take any cash. Where did that information come from? So we're going to need to be, I guess, aware of the general situation of the client, and there's not going to be a really great specific procedure to help us understand whether there are any bank accounts that might not be accounted for. Now, of course, we could always make an inquiry. So you might say, hey, do you do any offshore banking? All right. Are there any bank accounts in different countries where maybe they're trying to perhaps use less of a domestic bank account, perhaps for tax purposes? But we might inquire about offshore banking, but really it's going to be our spidey sense, right? You're going to be looking for purchases that are big, that perhaps don't, link to a loan, link to any cash coming out of the accounts, and say, where does that come from? So I don't really have a specific great procedure here for completeness. The other thing you might do is review the bank reconciliation. And that would help you identify how many transactions end up on the bank statement that maybe are not in the accounting records, but that's more a transaction issue. It's not really like missing cash accounts. So here we're really worried if a company is stashing cash for theft or fraud, or to try and minimize tax purposes, if they're stashing cash overseas, that's going to be really hard for us to detect, because I can't go to every bank in the world and say, hey, do you have an account for, Umbrella Corporation, for example? So you're going to need to be really careful here and just keep your eyes out. Now, when it comes to accuracy, valuation, and allocation, remember that the confirmation that we asked for earlier up the top here, when we asked for a confirmation, that confirmation is going to confirm here are the accounts, here are the account numbers, here are the account balances. So our confirmation is going to help us with our valuation. When it comes to allocation, everything cash is a current asset. All right. You might have to check normally if they have any term deposits, because if you have a term deposit, like money that's somewhere that's locked in for, more than 1 year, that's going to need to be a non-current asset in your accounts. So when you're looking at the balances that come back from your confirmation, you want to check, are we looking at current assets, non-current assets, and make sure that they're split apart and they're recorded correctly. Now you notice I probably haven't talked much about accuracy, because we're going to be testing accuracy when we test the transactions that are related to the cash account. So that's going to be our revenue, it's going to be expenses. Okay, so we're going to look at the accuracy side of it there. Now, the last one is rights and obligations. So realistically, it's going to be the rights side of things, because do we own the bank account? And again, when I go back and I requested that confirmation, the confirmation will provide us with information about who owns the account. So whose name is the account in? And we want to make sure that the company that has control of that account is a company that the parent or the entity controls as well. So we're looking at owning or controlling, and we're going to review the bank confirmation for details of who owns or controls the bank account. Make sure the client, this entity is part of the client's business structure. All right, so you want to make sure if subsidiary A is the name the bank account is under, that we have control of that subsidiary and then we own it, and we can roll that up. Now, of course, it does get a bit more confusing and more complicated when it comes to auditing groups, because you've got to consolidate all of those accounts and you need to make sure that everything is happening at that lower level as well. But of course, if you have a group audit, you're going to have component auditors. Those component auditors are going to be going away and doing things like bank confirmations, and we're going to rely on that evidence. So those are my procedures there for testing substantively over cash. If you have any other procedures that you've used or that you've seen somewhere, I'd love for you to share them, or if you have questions about them, please share them in the comments. We know that auditing cash is always a high risk account. People are more likely to try and steal cash, especially if they have access to physical cash. It's a little bit more difficult with electronic cash, but not impossible. So there was an example at a bank in Australia here called ING, where a woman who was an accounts payable clerk had access to the bank accounts, and she had access to log-on details for employees who had left the firm or had been terminated or fired, and she could adjust the journal entries. So this woman stole $45 million worth of cash from the bank. They only recovered a small portion of it by doing things like paying real estate agents, direct deposits to luxury handbag providers, etc. So when you're auditing the transactions for expenses and other accounts, you need to look at those accounts really carefully. And as well, check the balance of the cash. So cash is one of these accounts where it's quite complicated in the audit. You got to make sure you're auditing the transactions as well as gathering evidence on the balance. So that's all I have for you today. Of course, I'd love for you to share your ideas of auditing cash in the comments with our learning community here on YouTube. If you thought the video was useful, I'd always appreciate a thumbs up. Of course, if you haven't already, consider subscribing. Stay safe and stay well out there in our COVID world, and I'll see you soon.